In this section we're going to take a look at the signs for a top. Now the signs for a top are going to occur in a little bit different fashion than the signs for a bottom. If you remember, the bottoming formations we were looking for really were short-lived. They were occurring over a couple of bars, and I think this is for a very specific reason. My belief and what I've seen in the market is that as the market descends, that individuals simply get to a point where they tell their brokers or they get online and they sell at any price. It doesn't matter what it is, get me out at the market and get me out right now. I want to stop losing money. On the other hand, as prices start to go up, individuals get into the market in a much slower fashion. First, they see that prices have moved up off of the low to higher prices. This attracts them to the market. Then prices start to stagnate. That draws more individuals into market, buying the market up further. Individuals see the market relaxing again, forming a base. That draws more individuals in. The market starts to move up. And then the market starts to come down. So this process of individuals seeing that the market is going up, they get interested in the market. They see that prices are starting to hesitate, so they buy into the market. That process is exactly what the professional money wants to create. You notice I said create. These individuals understand market psychology. You better believe this, that these people know how crowds react and how people are going to behave when they see certain things going on in the markets. They will facilitate this through news announcements. They'll facilitate this through interviews on popular news programs, financial news programs, all in an effort to influence the herd into making decisions that facilitate their trading. So let's take a look at how this process of drawing traders in occurs and shows us footprints across the chart. The first thing that you're going to notice when a market is showing signs of a top is that you'll have multiple bars with high volume, the bars closing above the 50% level at a new high. Now remember, the new high can be relative. You can see obviously this high is lower than this one. But relative to this low, it is a new high. So remember, it's not important that we have only our sights set on markets that are at all-time highs. We simply need to compare, is the market at a relative new high, but then look for these other signs. Now, what do I mean by multiple bars? Well, as you watch the market trade, you'll be able to see once the market starts to consolidate. At this point, we can see that the market has made a high, a retracement, and now has made another high and is coming down. You can see that this looks like a little M here. Now, this M type of top is very common and should be your first clue that the market might be in a topping formation. You can also look for markets that exceed prior highs by specific Fibonacci ratios. I deal with this in other places, so I won't deal with it too much here. Now, this is simply a clue that you should start looking for the market top formation. So, now that we have some bars to look at here, here, and here, we see that we have a low. We want to now go into the intraday bars and see whether or not we have high volume. Now with the intraday bars, I'm going to give you a very simple visual test that you can use without any complex mathematical formations or formulas that will give you insight into the market. Now here we can see that these extreme levels form, roughly speaking, a uniform top.